If I had to completely start over in 2025, no money, no connections, and no experience, this is exactly what I would do to buy my first rental property step by step, with nothing but hustle and a blueprint. I'm going to walk you through how to find the right property, fund it using other people's money, fix it up, fill it, and finance it with using little to none of your own money. This is the exact roadmap I use to go from the middle class to owning over $50 million worth of real estate. This is not theory. I've done it hundreds of times, and I'm going to show you how to do it today. So if you want to get your first or maybe even your next rental property this year, even with no money or experience, get your notepad. This is the step-by-step guide. Let me take you back to before I bought my first rental property. I was working a decent job, making decent money, but every time I looked ahead in the future, I got a pretty unclear image of when I was going to be able to retire. I assumed I retire at the age of 65, but I did not know for sure. And having that insecurity about when and if I was going to be able to retire was very, very unsettling. I was starting to look at my W-2 job as something that was potentially holding me back. And while I did not want to quit that job in the next 12 or 24 months, I did want to start to build something that would give me the ability to make some extra income, that would give me the ability to grow my net worth out of the normal strategies that most people use. So I read Rich Dad Poor Dad, and I turned to real estate thinking that was going to be the vehicle that was going to give me that financial independence and that financial freedom. Now, everybody's in a different point in their life, but I would assume learning how to have some more financial stability and being able to control your financial future and retire at an age where you're young enough to actually enjoy it would be appetizing to most people looking. So that's why we're going to dig in. You've probably done everything or most things right, but financial freedom also probably feels out of reach. You don't need more money. You need a system that is repeatable that will lead to more money, and then the confidence and guidance to build that system. All right, let's get into the 5-step method. I call this the effing method that will teach you how to buy real estate the right way. Step 1, find the deal. The first thing I do right now is start to get a pipeline of leads that will turn into deals coming across my plate. Real estate is a numbers game. You're not going to buy every single lead that you look at. So we need to start to come up with some sources of leads that will eventually lead to deals. And you're not just looking for any old house here. We're looking for houses that you can buy at a discount and that will cash flow when everything is said and done. So that's a specific type of deal, and we have to go to a specific type of place to find that deal. Here are a few different places that I would look to start that lead flow machine. And by the way, I get over 400 leads a month in my flipping company. So I've tried all the old school styles, all the new school ways to find deals. And these are what I would start at if I were you looking for my first or my next deal. The number one place I would look by far is from wholesalers. Wholesalers are people that wholesale real estate. They get properties that are distressed, that have some meat on the bone, that are potentially deals under contract on a sheet of paper. Then they look for a buyer to sell the deal to. The buyer, hopefully you, will buy the deal from them, close on it, and they will get paid upon closing. You can find these wholesalers by joining your local real estate investing meetup groups, by going to meetup.com and other places to find local real estate investing focused meetups. You can join your local real estate investing Facebook groups by going to Facebook and searching for real estate investing groups in my area. You're going to find a ton of wholesalers there. And also those little 2-foot by 3-foot bandit signs that you see on the side of the road, those are wholesalers as well. So take a picture of those. Those are 3 very simple, very easy, free ways to get a group of wholesalers inside your phone that you can then, of course, follow up with, befriend, and converse with to get more deals coming your way. Another great way is driving for dollars. This is driving around and looking at distressed properties. You're looking for properties with 2, 3, maybe 4 foot tall grass, condemned signs on the front door, boarded up windows, a house that is obviously vacant and not lived in not very good condition. You're looking for these houses, and then you're going to call the owner, you're going to text the owner, and utilize technology like Driving for Dollars apps that are out there. I have one called Deal Pilot where you can go out and find these deals, contact the owner, because guess what? these houses that have been abandoned for a few years are going to sell to a real estate investor. They're not going to sell to a homeowner. They're going to sell to a real estate investor. Now, will they sell in 60 days or 6 months or 6 years? Nobody knows that for sure because you don't know the exact situation, but get a pipeline of these distressed properties through Driving for Dollars inside your phone or inside your systems, and they will lead to buys. Some markets you can even use Zillow for sale by owner. You're not probably going to find a deal by searching Zillow properties are listed with agents. However, you can find deals potentially that are for sale by owner. Contact the owner, look at the pictures on Zillow, and see if it's a handyman fixer-upper or a house that needs some work. That will probably mean there is some negotiation to be had. If it's in perfect condition, if any of these property leads that you get are in perfect condition, meaning they're retail ready or someone can move in and live in them just fine, those aren't the deals you're looking for. You're looking for the distressed, discounted properties, and you can use Zillow to find them. But you're behind your phone, poking around and scrolling around your computer, so it's less work. Therefore, the leads won't be as quality. But if you're willing to surf through the internet and if you're willing to do this consistently, you'll probably get a deal or two a year. I remember buying my very first rental property, walking in and thinking, this place is gross. How am I going to make money on this? I thought the only reason I got a good deal on this because the house was not livable and in gross, smelly condition. Little did I know that that's exactly what you need to look for. That's probably why I looked at 35 or 40 different houses and made offers and didn't get them, because I was looking at the wrong place. So just know that that gross, that smelly, that stinky house, that is what you're looking for. It's only going to be gross, smelly, and stinky for a short period of time. Wear a mask, clean it out, throw some kills on the walls and the floor, and it will get to smelling nice and looking nice eventually, I promise. Step number 2, fund the deal with OPM. This is where most people get scared. They say, I don't have the money to fund the deal. Well, good news is you don't need your own money to fund the deal. You just need to find other people that have money to fund your deal. Here's some quick, easy sources you can go to. Number 1, by far, is private money lenders. Private money lenders are friends, family, coworkers, people you know at church that have access to funding. Now, before you think that you don't know a private money lender, let me explain actually what a private money lender is. A private money lender is someone that you know that's in their 40s or 50s that has access to funding, probably not in their checking or savings account. Somebody that you know that's lived at their same house for the past 15, 20 years, there's equity in their house that they can tap into via a home equity line of credit and lend it out to you, or my favorite, somebody that has an IRA that is substantial. Most people can't or won't touch their IRA until they retire. So if somebody's in their 40s or 50s, they probably have a pretty good chunk put into their IRA. They can self-direct that IRA. It's very simple, a couple sheets of paper to do it, and they can self-direct it and lend it out to you. So again, these are people that you know or have a connection with that are normal middle-class W-2 type employees that have access to funding via the stock market, via home equity line of credit, maybe a life insurance policy, or retirement funds like IRA or 401ks. These are people that have money that they're not planning to touch for a while. Let them use it to make money on it and then also help you out. It's a great, usually double-digit return backed by real estate. There's a ton more that goes into this, and I have a ton of videos on this channel that talk about private money lenders. So after this video, go search for one of those. Number 2 is hard money lenders. Hard money lenders are not people like private money lenders. They are companies that are in business to lend money to real estate investors, specifically new real estate investors, to buy and fix up properties. Now, they're not quite as flexible as private money lenders, which is probably naturally what you would think, considering one is a friend or family and the other one is an actual business. So there are some requirements like liquidity or a down payment or maybe even monthly payments with hard money lenders. And you can use your own money, a line of credit you have, or maybe even use a private lender's money to pair with the hard money lender. But just know hard money lenders are out there and they're super easy to find. Just Google hard money lenders near me, look up FasterFreedomCapital.com, my hard money lending company, or ask other local investors. Just know hard money lenders are super easy to find, a little more strict, but worth it. One of the students inside my community was going with a hard money lender, but they needed $35,000 to bridge the loan, put a little bit down payment, and to use as monthly payment retainers to the hard money lenders. And all they did was post in the group, and they had 3 or 4 people willing to give them that $35,000. Now, I know that's not a little chunk of money, but also you're not asking for 500 grand or 300 grand. There probably are some people out there that you know that are scared of the stock market or fear that type of investing and think we're at an all-time high and would potentially be willing to pull some money out. Again, maybe not the whole amount, but just enough to work with a hard money lender. So contact your hard money lenders, ask what their requirements are, and start to build a plan to meet those requirements when you come across the right deal. Money follows confidence and clarity. So if you find a good deal, the money will come. Step 3, fix up the property. Once you own it, the next step is getting it in good condition to rent it out to an amazing tenant. Now, you're probably not going to do all the work yourself, and you shouldn't do all the work yourselves because it will take too long and you're probably not going to do a great job. My very first rental property, I did as much as I could, but I naturally had to hire out the things that either needed a permit or I didn't know what to do. I did the demo, I did the landscaping, I did the painting, and did as much of the side work and was kind of a right-hand man for the contractor that I could to save as much money as I could. So putting in that sweat equity is important. However, you are going to probably have to hire at least some, if not most, of the work out. Here's a couple things to focus on and then how to find the right contractors to work with. When you're rehabbing a house for somebody to live in and rent, you need to create the conditions that somebody wants to live in and not has to live in, because the best tenants have options of where they can live. So focus on the same things that you would focus on if you were flipping the house. Make the kitchen nice, make the bathrooms nice, make the walls and flooring clean and simple, as much hard surfaces as possible. We put LVP, luxury vinyl plank, in all of our rentals. Yes, it's a little bit more expensive than carpets, but year 3, 4, and 5, when tenants move out, we're cleaning, not replacing. You're gonna have to replace that carpet at a much higher rate than that luxury vinyl plank. Plus, you are attracting better tenants. We do granite countertops and tile backsplashes in our kitchen because it looks nice, but it is also a barrier for people banging things into the wall, smashing things on the countertops, and creating unnecessary maintenance calls and replacements upon move out. So make this thing nice and put as many hard surfaces in it as you can. Your tenants will thank you, and so will your pocketbook. And there's this sweet spot at how far to take the renovation. You're not on HGTV, so you don't need to do diamond plated quartz countertops everywhere. However, you need to make your house nice. Most people err on the side of putting lipstick on the pig, when in reality you should replace a few of the parts of the pig and put lipstick on it. So in general, my rule of thumb is look around at the houses in the area that are for rent and try to make the finishes of your house that you're rehabbing about 10% nicer than those houses. So if those houses have freshly updated kitchens, but they painted the cabinets, maybe you get new cabinets and freshly finish the rest of the kitchen up the same way. Make it a little bit nicer and you'll attract a little bit nicer tenant. You can find good contractors by asking around. I know that sounds simple, but hopefully at this point, by the time you're in the middle of a rehab or starting a rehab, you have went to several local meetups, you have joined several local real estate investing Facebook groups, and you've befriended and got to know other real estate investors in your area. All you have to do at this point, after putting in all of that hard work, networking and talking and going to meetups and awkwardly talking to people, is now ask these people that you've met what contractor they use for the roof, or what contractors they would suggest for the flooring or the painting, and I guarantee you these real estate investors will gladly refer over these contractors for you to use. Now that the property is on its way to being in great, updated, livable condition, you need to start the process of step 4, which is filling the unit. A lot of people are scared of having a tenant living in their property. I am here to tell you, I have over 300 tenants in my property. There's a right way to fill the unit and a wrong way to fill the unit. I'm going to give you some tips on the right way to do it. If you do it the right way, managing tenants, especially a handful or less, will be a breeze. You will spend less than an hour a month managing your tenants if you put the right tenants in place in the first place. And that is where the rubber meets the road. The most expensive part about owning rental properties is not maintenance, it's not the mortgage, it is actually turning over the unit. Because if a tenant lives there for a year or two, they move out, there will be some damages that they do to the property, hopefully minimal, that you can maybe charge them for out of their security deposit. But then there will be some deferred maintenance that you have to take care of now that the property is vacant. At the same time, you are not collecting any more rent, yet you still have your mortgage, you still have your interest, you still have your property, your insurance, you still have your taxes, you still have a ton of expenses. If things go smoothly, it'll probably take you 2 to 3 months to find a tenant to backfill that property. But during during those 60 to 90 days, you're not collecting any rent and you still have all those expenses that I just mentioned. So the key here that most people don't understand is limit turnover. Get good tenants in the first place that stay an average of 4 to 5 years. This allows you to maximize your cash flow and set enough money aside to when the tenant does move out, you have a little piggy bank here of money that pays your expenses for those 2 to 3 months while you're fixing up and filling the unit, and you're not coming out of your pocket to meet those expenses. This one's the simplest yet the hardest for people to understand and actually implement. You have to have clear guidelines and expectations for your potential tenants and your tenants to make this work. We do a lengthy process in approving tenants. If they can fog a mirror and make enough money, we don't automatically approve them like most people do. We call their previous and current landlords. We do a credit check. We do a background check. We do an eviction check. We look at their actual bank statements to confirm their spending habits and make sure it's a good fit for them. We would much rather pass on somebody that's slightly below the bar, although they maybe make enough money, and wait 2 or 3 weeks to get somebody that's well above the bar that we're confident will stay for 4 to 5 to 6 years. If a tenant moves out every year or two, it will be very, very hard for you to cash flow, which is not the end of the world because of all the other amazing benefits that go into owning real estate, like property value growth, debt pay down, tax savings, and all the other things. If cash flow's not quite where you thought it'd be, it still may be a great investment, but you can't have it all. You can't have the value growth. You can't have the debt pay down. You can't have the tax savings, and you can't have the cash flow. Just set it up for success at the beginning by being very stringent in your approval process. We have an entire checklist built out that our students get access to. If you're not in the community, I'm sure you can find one online or try to get one from someone else. As you are in the middle of getting applications in for your property, you need to be moving on to step 5, which is finance the property. You've already got some initial funding for the purchase and the rehab, but those are short-term loans. What you need to do is find the magic of a long-term loan over 25 or 30 years that allows your monthly payment to be as low as possible, that allows your cash flow to be as much as possible. You need this long-term loan to pay off your private lender or your hard money lender that gave you the money for the purchase and the rehab. You're going to do a cash out refinance long-term loan based on the new value. You take that cash out and you pay back your initial lender plus interest. And now you do owe this long-term lender the money, but again, it's over 25 or 30 years at as minimal of a payment as possible. There are 2 main places to go to get this long-term loan. The first option is small local banks. Small local banks are absolutely incredible. They're in every single market. They're these small community-style banks that have 5, maybe 10 branches in your market. They're not Bank of America or Commerce Bank, these big national banks. Those banks don't want anything to do with investment properties. You're dealing with small local banks because small local banks lend out money to small local businesses. And as a real estate investor who owns a house that is rented or will be rented, you own an asset that these small local banks love to lend on. Now, different small local banks have different appetites for how many single family rentals they want to have in their lending portfolio. They may be leaning on other small businesses as well, but just know in your market, there are small local banks that will fight over your business. You find them by, you probably guessed it, joining your local real estate investing Facebook groups, going to your local meetups, seeing what banks are a part of those groups, and asking the people inside of those groups which small local banks they use for cash out refinances on rental properties. The other option that has become a lot more popular over the past couple years is DSCR loans from national lenders. I actually have DSCR loans inside of FasterFreedom Capital. So if you're looking for a long-term 30-year fixed loan at a really, really good rate, just go to FasterFreedomCapital.com or check the description after this. However, know that these DSCR loans are a little bit newer and they're very, very appetizing right now. Your typical small local bank loan is going to be 20 to 25 years at 7 to 8%. Your typical DSCR loan will be fixed over 30 years, so a longer period of loan, meaning your monthly payment will be less. And right now, they tend to be a point to a point and a half cheaper than small local banks. So you get longer terms at a lower rate, which will allow you to cash flow. You can find these by simply Googling them, or FasterFreedom Capital has the best rates in the country, so I would just go there. So once you get the refinance, the initial lender gets paid back. You keep the property, you keep the cash flow, and you've done that all by recycling other people's money. For example, example, my very first rental property, I bought and had a $100,000 loan on it doing this process, and it was worth $125,000. Well, 11 years later, the property is worth $260,000 and I owe $60,000. The property grew in value because that's what real estate does, paid down the mortgage because that's what happens when you own rental properties. I've gotten a few grand of cash flow every single year since then, and I've saved over $100,000 in taxes. All in one rental property, about using none of my own money, not knowing what I was doing in a short 11 years. Markets shift, but the framework stays the same. There are nuances and strategies that get implemented as technology changes and as the economy shifts. However, if you do things the right way, you can still make money. I was cash flowing in 2014 when I got started. I was cash flowing in 2020 during the pandemic, and I'm still cash flowing today because I have the framework and I make subtle shifts and adjustments based on what the market is showing me. This is all about finding deals, using other people's money, and following the effing method. If you want to escape the 9-to-5 or at least have more financial flexibility, this is the path for you to do that. If this was at all helpful, make sure you're subscribed and hit the like button. And also drop a comment if you've been thinking about getting into the real estate investing game. And if you want to know what type of investing fits you, wholesaling, fix and flipping, or owning rental properties, go to the description and take my absolutely free DNA quiz. It's going to ask you 7 questions, and then it's going to give you a detailed explanation at what type of investing strategy works for you and your goals. Thanks for being here. I'll see you on the next video, where I'm going to go over how one of my students went from owning 0 properties to owning 8 rental properties in 10 months, all using none of their own money, all investing remotely. See you on the next one. Check out this video.